Hello and welcome back to the Geordie Pig Investor channel. Today we're going to be going through, is Apple stock a buy right now? What is Apple? Well, if you have been living under a rock and you don't know what Apple is, it engages in the design, manufacture and sale of smartphones, personal computers, tablets, wearables and accessories and other varieties of related services. The company's products include iPhone, iMac, iPad, iWatch, Apple TV, Beats products, HomePod, iPod Touch. There's loads and loads and loads of different types of brands that they've sort of branched out into now, with their main ones obviously being the iPhone, MacBook and iPads, as them still being their main sellers. Its customers are primarily in the consumer, small and mid-sized businesses, education, enterprise and government markets. Some key stats to do with Apple. It's obviously based over in America. It is in the technology industry. It has a colossal market cap at 2.6 trillion. You've read that correctly. That is in the trillions. It turned into a public company in 1980, has over 150,000 employees with a dividend growth streak of 11 years and has a 5-year dividend growth rate of 4.78% with a dividend yield of 0.57%. Over the last year, it's actually performed not too badly, being up 3.55%, although it has been at a much higher point than it is right now. Hence why I decided to jump on and thought it would be a great time to do an analysis over the Apple stock to see if it is a buy, sell or hold as of right now. You can see from the graph that it actually peaked at close to $200 before coming all the way back down towards the mid 160s into around about $170 as it is right now. So Apple's earnings call and fundamental analysis. In their recent earnings call, the company have maintained a steady course with both total company revenue and iPhone revenue projected to be on par with last year's figures. The services business retains its momentum with expectations for double-digit growth. Gross margin is expected to hover around 46%, which their CEOs were expecting, and operating expenses will likely range from $14.3 billion to $14.5 billion, while all other income and expenses, also known as OI&E, are predicted to be around about $50 million. On top of this, to show that the company is very confident in their financial health, they have actually authorized a cash dividend of $0.24 per share, which was paid out in February. Despite a shrunken quarter, the company showcased resilience with a reported revenue of $119.6 billion, which is an increment of 2% from the previous year, and it also had an EPS of $2.18. The upswing is echoed in the setting of revenue records across more than 24 countries, including all-time highs across Europe and Asia-Pacific outside of China, with pronounced double-digit ascents in a plethora of all of their emerging markets. Their fundamental analysis, they have positive free cash flow, they have a positive 3-year revenue growth, they have positive operating and net income, they also have positive gross profit, they have very, very solid short-term and long-term solvency, they have a very high Altman Z score. Their debt to equity is not too bad. It's not amazing, but not great right now. And they do have a positive net debt with a negative 1-year revenue growth. So you can see overall, Apple's still got a lot more positives than negatives as of right now. And with a company the size of Apple, it's quite rare to actually see them trending downwards. So sometimes that's always the best time to try and get in, especially if these companies, like I say, don't often trend in that direction. Apple's free cash flow. Free cash flow is the money a company has left over after it pays for all of its expenses and any investments it needs to make to keep the company running smoothly. Apple's free cash flow has some of the most impressive numbers across the world. It has a consistent increased free cash flow at a steady rate of over 10 years, but what's more impressive is just the amount that they actually have available. Currently, they've got over $100 billion in free cash flow, and they have a very small payout ratio of only 15%. So by this, it means that they're going to be able to comfortably buy back lots of shares, which they are constantly doing, and hopefully raise that dividend, which they haven't been doing at a great rate as of late, but I'm hopeful in the years to come that they will increase that dividend growth rate at a faster pace. But that's just something that you'll have to gamble with if you do decide to buy into Apple stock. And I do believe as well with Apple, you're not just buying in for the dividend growth rate. There's plenty more positives to do with the company, especially just the capital growth that you're going to get within a stock like Apple, I believe is going to be fantastic over the long term. Moving on to Apple's discounted cash flow valuation, using the DCF method of estimating the current value of a company based on projected future cash flows adjusted for the time value of money. We have Apple currently priced at just under $170. And when I plugged in a discounted rate of 9% and a terminal growth rate of negative 2.7%, it came out as Apple's DCF valuation being $72.50. When I plugged in a discounted rate of 8.8% with a terminal growth rate of 0%, Apple came out at being $101. And when I put in a discounted rate of 8.5% and a terminal growth rate of 2.7%, Apple's best case scenario came out at $166. We can then add this into the relative valuation, which by combining the two is going to give us the intrinsic value. And the relative valuation is calculated by comparing it to other competitors based on certain metrics. These metrics can include EV to revenue, EV to EBITDA, and PE ratios. But these are the three main ones that I personally use when working out my different valuations. The worst case scenario, as you can see, is at $146 when plugging in these numbers. I then had a base case scenario at $165.91, and I had a best case scenario at $181.80. Like I just said, to grab the intrinsic value now, we can add the two together and divide by 2 and get our three averages. So our worst case scenario came out at $109.40, our average case being $133.50, and our best case being $174. There's one other method that I like to use when valuing a stock, and that is getting the Wall Street estimates for this particular stock. The Wall Street estimates are an average estimate of a public company's quarterly earnings and revenues that lead to a valuation of that company. These numbers are forecasted by a company-specific analyst who provides research on that particular company and therefore comes up with what they believe is an accurate valuation of the company. There are multiple analysts for mid to large cap companies, so a company like Apple, being basically one of the biggest companies in the world, is going to have a lot of analysts looking through the company on a daily basis and predicting their future price. They predicted that a worst case scenario for Apple over the next year would be $159.58. They believe an average case scenario, it would come out at being around about $204.53. And they believe the best case scenario would be worth around about $262.50. So now we've got all three of my valuations that I like to use when valuing a stock. I can remind you that the Apple stock is currently worth $169.50. And we can now add the three together and get our three final scenarios. So at a worst case, Apple stock is likely to be valued at around about $126.10. And if you want to use a 10% margin of safety when buying the stock, you'd be looking to buy it around about $113.50. If you use a 20% margin of safety, you'd be wanting Apple to be at around about $100.90. On our average case scenario, Apple came out of being worth $157.10, and by using a 10% margin of safety, you'd be looking to buy $141.40. And with a 20% margin of safety, you'd be looking to buy $125.70. And our best case scenario for Apple, it came out of being worth $203.50. So with a 10% margin of safety, you'd be looking at buying up $183.15. And with a 20% margin of safety, you could be looking to buy at around about $162.80. So from these numbers here, you're probably thinking now, well, your worst case is a mile off its current price and the average case is still nowhere near. That's without even thinking about putting on 10% and 20% margin of safety. And if you looked at the best case, it would only be worth buying, in quotation marks, if it was at a 10% margin of safety. But do I believe that Apple stock is a buy, sell, or hold right now? Well, I think a company as big as Apple will always trade at more of a premium price. With stocks like Apple, I'm personally very happy to pay a premium price, as I know that stock is going to be a core holding over the very long term in my portfolio. I obviously don't want to be overpaying for these types of stocks, but when a stock as brilliant as Apple is at a reduced price, hence how it has been over the last couple of weeks with it trending down, I don't like to pass up on these opportunities. I personally always use my average case scenarios when pricing the majority of my stocks, but with a stock as big as Apple, and with it being classed as a premium stock in my opinion, I am more than happy to use the best case scenario price with a 10% margin of safety, which would show that $183 looks at a very good price. Not to mention it's had an 11-year dividend growth streak, alongside 5% average yearly growth. It's got a crazy free cash flow, and has really, really big share buybacks on a yearly basis. On top of this, a stock like Apple with such a small dividend yield is obviously not going to perform too well in certain metrics. Hence why I believe in the first metric, it was valued very low. So you've got to take that into account as well. And personally, I believe Apple stock is just going to be such a brilliant hold over the long term. I don't see the company going anywhere anytime soon. And I know there's noise over in China with new phones over there, people believing that they're moving away from Apple stock, but I believe across Europe and America, it's still going to be such a big powerhouse, and I do still think that in China, it will eventually come back stronger than it has been, and will start performing well over there again. Anyways, this is the beauty of investing. You get to decide what stocks you want to buy and whatever price you're comfortable with paying. So, having said that, is Apple stock going to be on your buy list over the coming weeks? Let me know in the comment section down below. I hope you've enjoyed the video today, guys. Please let me know of any other stocks you want to see a full breakdown on. Thanks for watching. This is the Geordie Pig Investor. Over and out.